Welcome to ETF Market Insights, the ultimate destination for Canadian DIY investors eager for the latest on ETFs and the economy. Join us every week for timely insights and actionable strategies, all brought to you by BMO ETFs and our experienced panelists. Don't forget to subscribe, and let's jump right into today's episode.
Welcome back to ETF Market Insights. I'm your host, Erin Allen with BMO ETFs. And today on the channel, we are taking a small step outside of our usual ETF-related content. And we're introducing Canadian Depositary Receipts, also known as CDRs. And CDRs were introduced to the Canadian investment landscape around 3 years ago and were previously only available on US-listed stocks like Tesla, Amazon, Google, for example. But BMO has recently announced the listing of our international stock-based CDRs that represent fractional share exposure of global companies. So many of you may be familiar with ADRs, American Depositary Receipts. These have been around for over 100 years. And while CDRs are not the exact same products, there are many similarities. And we'll get into that today, along with a very detailed explanation of how these products work and the need that they solve for investors. Before we do get started, a quick reminder that we're not providing investment advice or investment recommendations. Today's episode is all about providing education for Canadian do-it-yourself investors. And today I have the pleasure of being joined by Dave Hudson, who is head of structured solutions here at BMO Global Asset Management. And he was a big part of the launch of our new CDR program, which we're very excited about. So welcome, Dave. Welcome to the channel.
Hi, Erin. Thank you for having me.
It's great to have you. Let's maybe start small here and kick things off. Help us understand sort of the need that this product solves for investors. What were some of the challenges that investors were facing when investing globally?
Yeah, so thanks, Erin. I think most investors today think globally. And if you previously wanted to buy a stock that wasn't trading in Canada, you would likely take your Canadian dollars, convert it into the currency, maybe it's US dollars that the stock is trading in, and there's a cost to that. And then you would own the stock for as long as you think you should own it. You go and sell it, and maybe you need those Canadian dollars back, so you convert back. And so you're getting, as an investor, you're getting, costs on the way in, costs on the way out, and then you're also exposed to currency fluctuations. So what we're trying to do is to allow Canadians to access all their favorite names that are listed globally, but just not have to worry about currency fluctuations and not have to be burdened with those costs, those transaction costs. Some stocks trade in jurisdictions that they don't even trade during the same hours as they do in Canada. And so that makes it even harder for them to access those markets. And so BMO has launched a new financial product that allows investors to access these global names here in Canada. And that's the idea.
That's really exciting. So a lot of it is similar to the benefits that we often speak to when we talk about the invention of ETFs, giving investors flexibility around trading in international markets, while they might not be open. And of course, that hedging benefit. And we've seen massive growth in the ETF space, but there's still many investors who want that individual stock exposure. And so I think this is a great innovation for those Canadians to help them access these hard to reach stocks.
Absolutely, Erin. So I think CDRs can be purchased just like any other share or ETF in Canada. You just go to your favorite investing platform like BMO Investor Line or whichever one you use, or call your financial advisor and have a discussion on CDRs. I think the ease of access to it, you're able to buy it and sell it just like any other ETF or stock.
I've never tried to trade an international stock, but from what I understand, you can't do it on many online brokerages, and you can only trade in ADRs, right? So I think it's definitely giving that access to investors. So help us understand a bit more in terms of what CDRs are and how they're structured, if you would.
Right. So CDRs are financial products that allow investor to access these global names, but in Canadian dollars without worrying about a currency hedge. And so as an investor, you would buy receipt. It trades like a share on the exchange in Canada, and that will give you a certain fractional exposure to an underlying share. And every day, the ratio is adjusted depending on what happens to the currency fluctuations. But the net benefit for the investor is they don't have to worry about those fluctuations. They're just worrying about whether the share price will go up or down.
You mentioned the ratio, so let's dig into a bit more about that because investors are going to see that and probably ask what that means. So can you explain what that CDR ratio is?
Sure. So when you buy a CDR, it will give you a certain entitlement, a fractional exposure to a certain number of shares. Let's say it's 0.5 shares. And every day that ratio is going to change. It's going to go up or down depending on what happens to the currency hedge. So what it means as an end investor is your entitlement to the number of underlying shares could go up or down. But the net effect is you are agnostic to currency fluctuations. And so that is the mechanism in which we deliver the hedge return.
So simple example, you have a hedge or a CDR ratio of 0.5. You would have to own 2 CDRs to get the equivalent exposure of 1.
Exactly. So one of the benefits of BMO CDRs is they start trading, when we issued them, they were issued at $10. So you can think of your global equities that you might buy, and maybe they're trading at $100 or $200. So here you have a very easy access point to purchase globally listed shares. And so, you're buying the CDR at $10 and it gives you let's say one CDR on day one, and then it will go up or down. The ratio that each CDR equals will go up or down every day.
Okay. And can you give us a bit more details in terms of the history of these products, ADRs and CDRs?
Sure. So ADRs have been around for over 100 years, and it's a huge market. Those are in the U.S. They trade in U.S. dollars. And the Canadian take on it is a little different. The Canadian take is we wanted to help investors access global companies, but to do it in Canadian dollars, to not worry about the currency fluctuations, and to have fractional exposure. So an ADR, the number of underlying shares per ADR, it usually doesn't change. It's usually the same, and it's quoted in US dollars, and it trades on a US exchange. So in Canada, it's a little different in that you have this concept of a ratio, but this is a made in Canada solution for Canadian investors. And so that's the key difference between it. And we think, the CDR market in Canada, which started in 2021, it's still in its infancy. It has a huge runway to grow. And we're seeing a number of tickers in the US and now globally. So we're seeing a huge growth. And we think it's similar to where ETFs were 12, 15 years ago. We're at that inflection.
For sure. Very exciting. And we recently did an episode on the channel about overcoming that home country bias. But why should investors overall consider expanding globally and specifically using CDRs for that exposure?
Well, I think investors as time goes on, I think investors have moved out of their Canadian-centric approach. And, we live in a very global world now more than any time in history. And, we have a great suite of ETFs for that and to access that. But certain investors want to be able to pick certain names. And so previously where that's difficult, now there's that possibility. And so we're really looking to expand the platform to really allow Canadians to have that ability to buy the shares that they want. You can think of some of the names that Nintendo, Mercedes, Nestle, these type of names that are household names that you certainly buy their products. And now, you'd say, well, yes, I think it'd be a good investment decision. And so we're just building out that platform, trying to give them that opportunity to do so with relative ease.
And how are we choosing the companies that we're picking to list?
Yeah, so we look at we're looking at the largest and most liquid names globally, and that's where our focus is. Our focus is creating a platform of large liquid names, and we hope that this will continue to expand globally. To to all the jurisdictions you can think about. So the focus on the ones we are listing is on large, globally listed names.
Yeah, we want to have that suite available. So if the next hot stock you want to own is coming up, it's there for you. But comment below to all of our viewers if there's a stock that you'd like to see listed as a CDR, because that would be interesting for us to know as well. Dave, can you get a bit more into the currency hedging of these solutions, why that's important, and maybe the similarities in terms of how that works versus an ETF?
Absolutely. So when you go and think about it, pick a stock that you like Nintendo. Maybe you have an interest in Nintendo. Today you would buy it. If you were to buy it as a Canadian, you'd probably buy the US ADR, and you're not really thinking about currency fluctuations between the US dollar and the Canadian dollar. Or if you were buying in Nintendo directly, if you had that ability to the yen and how that would trade against the Canadian dollar, you're not really thinking about that. You're thinking, hey, I really want to just own Nintendo. I believe in Nintendo. And so what the CDRs do is they allow you to focus on the underlying company without worrying about the currency. It's a little different than the ETF hedges. Most ETF, when they do a currency hedge, it's quarterly that it's being done. And in this case for CDRs, it's a daily adjusted hedge. But the idea is very similar. You live, you work, and you transact in Canadian dollars, and you're not thinking about, you don't want to have to worry about currency exposure, and you don't want to worry about having the cost of converting currency in and out when you're, buying and selling shares in a foreign jurisdiction. So it's really to help Canadians easily access these global companies and just, focus on the companies themselves, not where they think currency fluctuations are going to go.
Taxation, Dave, always a hot topic when talking about investing. Can you give us sort of a high-level overview of how the dividends earned from CDRs would be taxed and how it would be taxed upon sale?
So although every investor has different tax circumstances, generally speaking, owning CDRs should look and feel exactly like you're owning the underlying share. So if you were the tax consequences should be the same if you were owning them. In some jurisdictions, there may be a withholding tax, and so you have watch out for that. In each case, you should talk to your tax advisor about the implications of owning foreign equities.
This is so exciting. Thank you, Dave. I think there's some great investment opportunities for Canadians on the horizons through this new platform. Proud to be part of bringing this innovation to the market. And as always, we are committed to educating on all these fronts on ETF Market Insights. So we'll continue to host more videos. If you do have more questions on CDRs, again, drop them in the comments below, and we'll drag Dave back to the channel, kicking and screaming. But I guess if I had to summarize the 4 sort of key things that CDRs offer investors relative to those individual foreign equity holdings, I'd say fractionality, affordable entry into these global stocks that you want to own, currency hedging, so reducing that foreign exchange risk, access to global companies, so trading again during those hours that the international markets might not be open, being able to trade whenever the Canadian market is open. And then lastly, and importantly, additional diversification, the only free lunch in investing, right? So helping investors overcome that home country bias. All right. Thanks again, Dave. Great insights. That caps off another great week of ETF Market Insights. Thanks to our viewers for joining us, and we'll see you next week. Bye for now.
Thank you for tuning in to this week's episode of ETF Market Insights. Don't forget to hit that subscribe button and sign up for alerts so you never miss our latest content. For more insights and to keep the conversation going, visit us at etfmarketinsights.com. Join our mailing list and explore a wealth of resources and tools designed just for ETF investors. Until next time, stay informed and empowered in your investing journey. This session is for informational purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or a recommendation to buy or sell. Particular investment and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to your unique circumstances.